They look like dollars. They move like dollars. They control markets, governments, and entire economies. But here is the uncomfortable truth. A huge share of the money that runs the modern world isn't really money at all. It doesn't live in your wallet. It doesn't exist as cash. Most people will never see it, yet it decides interest rates, crashes banks, and quietly rewrites who holds power. These are the shadow dollars. And once you see how they work, it's very hard to unsee. Let's start with a company in Europe that needs dollars to pay for shipments. Because global trade runs on them. Instead of withdrawing stacks of cash, the company borrows dollars that don't technically exist yet. A bank creates them with a keystroke. They appear on a balance sheet. They move across the world. No printing presses. No paper, just accounting. But here is the catch. Those shadow dollars can be lent again and again. Each layer depends on the promise beneath it. It's like building a skyscraper out of IOUs. As long as nobody calls in the IOU, the building stands. But the moment one person asks for real cash back, the system starts to shake. This system has a name in finance, the Eurodollar market. Not Europe the place, but Europe the idea. It is money living outside domestic banking laws. Dollars created outside the United States. They aren't illegal, they're just invisible. Invisible to voters, invisible to regulators. Yet quietly over decades, that invisible system grew larger than the visible one. More loans, more leverage, more dollars that aren't really dollars. Until one day, the math stops being comfortable. Here's the hidden mechanism that makes it fragile. Every shadow dollar relies on collateral, usually safe-looking assets like government bonds. Those bonds are pledged, borrowed, repledged, and recycled through the system. Crucially, one bond can support multiple loans. It's efficient and profitable until the value of that collateral drops even slightly. Then the chain tightens. Lenders demand more collateral. Borrowers scramble to find it. And suddenly, millions of shadow dollars vanish, not because they were spent, but because they were never truly there. Markets call this a funding squeeze. People experiencing it call it panic. Now here's the irony. While politicians argue about inflation and people blame money printing, the real power sits on private balance sheets where shadow dollars expand and shrink without a vote, without debate, and sometimes without warning. Central banks don't control this system. They chase it. When things break, central banks rush in as firefighters, not to give out free money, but to replace the shadow dollars that just died. The crisis looks like the world running out of confidence in promises. And when promises fail, reality arrives fast. Why would anyone build a system like this? Because it solved a problem. Global trade needed speed and flexibility that physical dollars couldn't provide. Shadow dollars fueled globalization. We created a financial engine powerful enough to run the world, then pretended it didn't exist because it didn't fit inside old definitions of money. So when markets crash, the public is told something unexpected happened. But to the people inside the system, it rarely feels unexpected. It feels like math finally catching up. The risk is simple. When real dollars and shadow dollars diverge too far, trust breaks, and the entire structure tightens like a knot. The stakes are real world. Jobs, savings, homes, and entire national economies are influenced by a form of money most people don't know exists. So if so much of the global economy runs on promises instead of cash, how stable is the system, really? Maybe it works forever. Or maybe one day, too many people ask for real dollars at the same time. And the shadow dollars step out of the shadows not by revealing themselves, but by vanishing.